Good afternoon and welcome to another edition of African Economy, your weekly dive into the policies shaping Nigeria and the continent's financial landscape. I am your host, Owangfona Basim. Walter, here's what we are tracking for you today. South African manufacturing sentiments hit lowest point since pandemic. Nigeria opens 50 oil blocks, targets $10 billion in new energy investment. China hands over space tech to Namibia, unlocking significant satellite advantage. Ghana seeks control of offshore asset containing estimated 1.5 barrels of oil. Let's start off first with the US dollars, how it is faring against various African currencies. The US dollar Nigerian naira exchange rate rose to 1,447 naira 11 kobo with a percentage of 0.01. The US dollars against the South African rand is at 17 rand per US dollars, which shows that the US dollars is rose to 0.0114, a percentage of 0.07. The US dollars Zambian kwacha exchange rate is at 22 kwacha, a percentage of 0.08. The US dollars against the Egyptian pound is at 47 pound, which shows that the US dollars is falling against the Egyptian pound at 0.0200, a percentage of 0.04. The US dollars against Algerian dinar is at 130 dinar per US dollar, which shows that the US dollars is rising against the Algerian dinar at 0.06%. The US dollars against the Angolan kwanza is at 921 kwanza with a percentage of 0.03. Away from that, the Nigerian Upstream Petroleum Regulatory Commission (NUPRC) has announced that the 2025 petroleum licensing round in Abuja, describing it as a critical step in reviving an industry that has suffered years of declining exploration and capital flight. Unveiling the round, the Commission's Chief Executive, Gbenga Komolafe, said the exercise spans onshore, shallow water, frontier and deep water terrains, adding that the initiative is designed to expand reserves, increase national production, and restore global confidence. He noted that the bid process has been fully aligned with the Petroleum Industry Act, which prescribes a transparent and competitive framework. Of the 50 blocks on offer, 15 are onshore asset, 19 are in shallow water, 15 are frontier blocks, and 1 sit in deep water. Projections from the NUPRC suggest that full development could deliver up to 400,000 barrels per day over the next decade. Komolafe stressed that the round is expected to add up to 2 billion barrels to the country's reserves. Despite its vast coastline, Nigeria's port infrastructure is causing significant daily revenue losses, totaling approximately 20 billion naira. The country loses potential port revenue due to deteriorated infrastructure and inefficiencies, redirecting trade to neighboring ports such as Cotonou, Tema and Lomé. Illicit trade by over 25,000 foreign ships in Nigeria's coast waters significantly impacts national security and financial stability. While the Lekki Deep Seaport shows promise, other ports such as Apapa and Onitsha require urgent redevelopment to unlock potential. Nigeria has tightened its grip as the U.S. largest African crude supplier in 2025, exporting $2.57 billion worth of oil between January and August. According to U.S. Census Bureau data, the West African nation accounted for more than half of all African crude imported by the U.S. During this period, shipping 33.23 million barrels out of a total 60.75 million billion barrels, accounting for 55% of all African crude import into the U.S. this year. Nigeria's exports dwarf those of its continental peers, including Angola, Libya and Ghana, underscoring its dominant role in transatlantic oil trade. In practical terms, more than 1 in every 2 barrels of African oil unloaded at U.S. ports originated from Nigeria. However, the gap between Nigeria and other African exporters remains wide as Angola, Libya, Ghana and others contributed the remainder, but none came close to matching Nigeria's volume. Still in Nigeria, the economy of Nigeria grew by 3.98% year-on-year in the third quarter of 2025, showing from a 4.23% expansion in the prior period, which was the strongest since the second quarter of 2021. The non-oil sector, which contributed 96.6% to the GDP, rose by 3.91% in the third quarter, up from 3.64% in the second quarter, mainly boosted by agriculture at 3.97% and 2.82% in second quarter, information and communication at 5.78% and 6.61%, real estate at 3.50% and 3.79%, financial and insurance at 19.63% and 1.29%, construction at 5.57% and 5.27%, as well as manufacturing at 1.25% and 1.60%. Meanwhile, the oil sector expanded by 5.84%, decelerating sharply from 20.46% in the previous period. The average daily crude oil production reached 1.64 million barrels per day in third quarter, below 1. South Africa's manufacturing sector is facing a steep slowdown, with business sentiments dropping to levels not seen since the country's COVID-19 lockdowns. Weak exports demand and Sisa Group Limited, compiled by the Bureau for Economic Research, fell to 42 in November from 49.2 in October, signaling a sharp contraction. Any reading below 50 indicates shrinking activity, and this marks the second month in a row the sector has remained in decline, according to report. The data reflects the difficulties in reviving a sector still grappling with global economic pressures, supply chain disruptions and limited demand. For many manufacturers, the road to the recovery looks slow, with both domestic and export markets showing little immediate relief. Still in the southern part of Africa, Standard Bank became the first African bank to integrate directly with China's cross-border interbank payment system, CIPS. The CIPS enables African businesses to pay Chinese suppliers in yuan, circumventing the use of the US dollar for transactions. The integration initiated at an event by the South African Reserve Bank strengthens Africa-China financial cooperation. Meanwhile, the new system decreases transaction cost, minimizes settlement delays and mitigates dollar exchange rate exposure. The British government has announced it will withdraw its $1.15 billion support for the Total Energies-led Mozambique liquefied natural gas project. The funding had been promised in 2020 through UK Export Finance, just before the UK committed to ending direct government backing for overseas fossil fuel product. According to a report, the $20 billion initiative was expected to position Mozambique as a major LNG exporter to Europe and Asia. However, the project was suspended in 2021 due to an Islamist insurgency. We'll go on a quick break, and when we return, we'll look at other concerns in relation to other continent. Stay with us. This has been African Economy, bringing you insights that matter in Africa's evolving financial landscape. And now to the southern part of Africa, where Namibia has officially acquired the China-aided satellite ground data receiving station, marking a milestone in its space technology initiatives. The signing of the official handover and takeover certificate for the SGDRS project was spearheaded by Namibia's Dr. Licio Mundia, Deputy Executive Director for Higher Education at MEISAC, and China's Ambassador to Namibia, Zhao Weiping. The signing signals the completion of Phase 1 of a historic bilateral project aimed at strengthening Namibia's indigenous technology and research abilities. This phase began in 2023 with deliverables that include a tracking and data receiving station, a comprehensive data processing system, and the training of Namibian technicians equipped to operate the facility. The station will be an invaluable asset for several sectoral offices, ministries and agencies, as well as higher education institutions and research organizations around the southern African country. After the SGDRS is fully functional, it will supply vital remote sensing data to support a variety of national priorities, such as better management of natural resources, increased agricultural productivity, disaster risk reduction, adaptation and mitigation strategies for climate change, and anti-poaching initiatives. Ghana is advancing plans to take control of a highly prized offshore exploration block, viewed as one of the country's most valuable undeveloped deep water asset. The block holds more than 1.5 billion barrels of oil in place and an estimated 1.2 trillion cubic feet of gas, carrying a potential value exceeding $3 billion. The deal follows a landmark deepwater discovery by Springfield E&P and represents a major step to accelerate development, expand national participation, and unlock one of Ghana's most promising offshore resources. Springfield E&P made history as the first Ghanaian and first African independent upstream company to drill in deep water and strike oil at this scale. However, early estimates suggest the reserves could rival Ghana's Jubilee field, which transformed the nation's oil sector in 2010. Yet, progress has stalled for years due to regulatory dispute, commercial disagreement, and complex unitization issues, prompting Accra to intervene directly. Lastly, on African economy, the South African economy advanced by 0.5% quarter-on-quarter in the third quarter of 2025, following an upwardly revised 0.9% growth in the prior period and marking the fourth consecutive quarter of expansion. 9 out of 10 industries registered growth, with trade contributing the most, alongside mining at 2.3% and 3.5%, agriculture at 1.1% and 2.5%, and finance, real estate and business services at 0.3% and 0.7%. From the demand perspective, according to the chart on the screen, household consumption at 0.7% and 1%, government spending at 0.3% and 0.9%, as well as fixed investment at 1.6% and 1.6% as well, kept growth supported. On the other hand, changes in inventories subtracted 0.1 percentage points. Net trade also contributed negatively to expenditure on GDP, as the 0.7% rise in export was outpaced by a 2.2% increase in import. On a yearly basis, the GDP expanded by 2.1% in the third quarter, the fastest expansion since the third quarter of 2022, accelerating from the prior quarter's upwardly revised 0.1%. And that's a wrap on today's edition of African Economy. Thank you so much for watching. Be sure to follow us across all our social media channels at Spectrum TV. Remember, African Economy airs live every Tuesday and Thursday at 2:30 p.m. Until next time, keep thinking progress, because